There's lots for small businesses to be positive about as we head into a new financial year, but it pays to be across the economic outlook to make the most of opportunities and be prepared for any pitfalls in the road. Today I'm joined by Commonwealth Bank senior economist Belinda Allen to talk about the outlook for the year ahead. Thanks for joining me, Belinda.
Thanks so much for having me here today.
So how's the economy tracking as we head into a new financial year?
It's a good, important question. So we are very focused on how the Australian economy is tracking at the moment, coming off what was really a very soft year in 2024. So if we think about how the economy last year went, it was below trend. It only grew about 1% under the weight of high interest rates, high inflation, cost of living challenges for the consumer. We saw that continue in the early stages of 2025. Growth to date has been quite choppy. The consumer's starting to show some green shoots emerge as we look into the new financial year, as interest rates are starting to come down, inflation's back within the Reserve Bank's target band. So we do have an economic recovery underway, and we have that in our forecasts as well. That will be led by the consumer. We also have the public sector continuing to put a floor under growth. So the public sector, in terms of government spending, government investment, has been the main growth driver in the Australian economy over the past 12 months. We expect that to continue, but not to the same degree that we've seen. We do expect the consumer to take over. So we are expecting a recovery. We've got growth at around 2% by the end of this year, 2.3% as of June 2026. But there are some risks on the horizon as well. Global uncertainty is heightened at the moment, given we have US trade policy front and centre for a lot of our major trading partners around the world, particularly China, the European Union and Japan. So global growth will be softer. That's going to have an impact on the Australian economy, more indirectly. So Australia has a relatively small trading position with the US. We only export around 5% of all our goods and services to the US. We're much more heavily exposed to the Chinese economy. So far, China's actually tracking okay. So we're expecting a small impact from offshore, and that impact is really going to come through uncertainty, given we see a lot of news headlines at the moment that could well delay some investment and spending plans by businesses and consumers in the Australian economy. But that shouldn't be enough to derail what we are expecting to be a brighter 2025 and 2026.
So you've touched on interest rates. What's your view for the outlook for interest rates, and what does that mean for small businesses?
Certainly interest rates and the outlook is on everyone's attention right now. We have seen the Reserve Bank cut interest rates twice so far in 2025. So we had them cut in February and in May. So the cash rate started the year at 4.35%, now sits at 3.85%. We did think they were going to cut rates in July. We had that surprise on-hold decision. The Reserve Bank board wanted to wait and see more inflation data before continuing their easing cycle. So we are expecting the Reserve Bank to cut interest rates twice more this year in August and November. That will take the cash rate down to 3.35%, around where we think kind of the average cash rate should sit going forward. So it's a pretty shallow rate cutting cycle here in Australia. Certainly we're expecting interest rates to sit higher than what we all remember from pre-pandemic levels, where interest rates were around 1%. But that easing or lowering of the cash rate should still be enough to see economic activity improve in Australia over the second half of 2025 and into 2026.
So good news for small businesses.
I think good news for everyone, for households and small businesses. And we know just how linked they are. And I think most importantly, what it means is we should see a further improvement in economic activity in Australia.
Now let's turn to another hot topic, productivity. What's your view on productivity looking ahead?
Certainly the buzzword at the moment. We have the federal government's productivity Commission get together at Summit coming up soon. A lot of talk about how important productivity is to secure an improvement in living standards in Australia's economy. We've had pretty weak productivity growth of late. That's for a number of reasons. We've seen particularly weak productivity in what we call the non-market sector here in Australia, so healthcare, education, public administration, those sectors heavily influenced by the government. Elsewhere, productivity's actually looked a little bit better. So in the private economy, productivity has improved, but we do need to lift productivity, and that is the best way to guarantee an improvement in living standards. So a lot of focus on how we can improve investment in the Australian economy, particularly outside of the mining sector. So what do we need to secure improvements of investment? That can come anywhere from access to finance, red tape, government policies, innovation, AI. All of these things can help drive improvements in productivity. But as I said, a lot of the focus needs to be on why productivity has been soft and how we can improve it. And for me, it really comes down to two things: investment and getting that higher, and really latching on to improvements in technology around AI.
Now, tariffs have also been a hot topic this year. Where do you see trade policy going as we look into the future?
There are some global risks on the horizon, of course, the three T's: Trump, trade and tariffs, which could impact on the Australian economy. So I think sometimes when we talk about tariffs, it's probably helpful to do a bit of a 101 on what a tariff is, particularly for a lot of our audience and here in Australia, where we haven't been as directly impacted as what we're seeing offshore. So a tariff is effectively a tax. A tariff is imposed on whoever is importing a good into the country. So what we're seeing is the US impose higher tariff rates on their trading partners. So if you're a small business in the US and you import a good from China, for example, that cost will go up for that good. So businesses can either wear that cost or pass it on to the end consumer. So it means prices are going to go up, and what it means is consumers and other businesses may buy less of those goods over time, and that really detracts from economic activity as well as lifts inflation. So overall, what we think is happening offshore is tariffs are going up. That's going to slow economic activity globally, particularly in some of Australia's key trading partners like China, and that could, as I said, slow economic activity. Trade policy at the moment is still very uncertain. We're seeing the US do a number of trade deals with their key trading partners, including the European Union, including Japan, China as well. We're seeing some more positive news coming out of that, but it's all creating a lot of uncertainty. We've seen financial markets be very volatile to date in 2025 as they're grappling with a more uncertain policy-making environment coming out of the US. And all it means is we think as a result of this uncertainty, confidence is lower. Business and consumer confidence have been heavily impacted by what's going offshore, and that can lead to delays in spending and investment decisions. So overall, while we have seen some better news more recently on offshore trade policy, it is slowing economic activity in a lot of Australia's key export destinations like China, like the European Union, like Japan, and that, as I said, has really created what we're calling it an uncertainty tax for Australia.
So this uncertainty tax, that's not good news for local small businesses.
It's not good news. The uncertainty around trade policy is not good news. And what we're really seeing over time is a reshaping of global trading systems. Now, that can create opportunities as well. I think what we can see here in Australia is we've got some really deep connections with a lot of key export destinations offshore. And we can start to build on that as others break down. So we often initially focus on some of the uncertainty around what's happening offshore, but there can be a lot of benefits for Australia as well. We have great institutional frameworks We're a really great destination for foreign investment given our certainty of policy making. So yes, we can focus on the risks, but I think it creates a lot of opportunities also here at home.
Now, let's turn to rising costs, which have affected consumer confidence. What's the implication of that for small businesses?
So a lot of talk about higher costs in the Australian economy. So particularly when Australia reopened after the pandemic lockdown, we saw inflation skyrocket. So as a reminder, we saw inflation peak at 7.8% at the end of 2022. And then we embarked on a high interest rate cycle to bring inflation back down. That has worked. So recently, inflation is now back within the Reserve Bank's target band. So inflation is growing between 2 to 3%. That's good news. But the level of prices remains so much higher. So while inflation's back under control, we're seeing the level of prices sit 30% above what they were a few years ago, particularly for key inputs like labour, rent, insurance, energy. And that's where I think a lot of the pain we've seen from consumers and small businesses really focus on. So there has been some better news more recently on inflation, but we can tell there are still some lingering impacts from that high cost environment.
Are there any other factors driving up costs for small businesses?
So I think a lot of it comes around the insurance, as I said, energy, labour. There's still a lot of challenges accessing credit and really great labour as well. So I think all of that kind of feeds through into this cost structure for small businesses. We've talked about the higher interest rate environment as well. And while interest rates are coming down, they're still going to remain higher than what they were and have been more recently as well. So I think all of that combined is really leaning into that challenges around costs for small businesses.
Are there particular sectors that are most impacted by changing consumer demands?
We know the consumer's been quite fickle of late. We've talked about higher costs, higher interest rates is really impacting on their ability and also willingness to spend as well. So consumers are certainly spending where they want to spend their dollars on. So we've seen strong demand for experiences, live events, travel. That's where we've seen consumers spend, and also when there's promotional activity. So I think Black Friday, Cyber Monday, end of financial year sales, that's generally when we see consumers come out and lift spending on goods in particular. Consumers have also had to spend more money on things that cost more. So healthcare, insurance, rent, energy have also drawn more of the consumer dollar as well. So consumers have had to pull back in other areas. So some of that has been in the discretionary side of consumer spending, particularly on the goods side. And as I said, it's been very choppy. It's been choppy by age cohort as well. So particularly over 2024 and the early stages of 2025, the younger age groups weren't spending, but the older ones were. More recently, we've seen that flip. So lower interest rates, some improvements on rent have meant those younger age groups have started to come back just more recently. And those who rent and own their home with a mortgage have also lifted their spending. So the leaderboard's starting to change. And I expect as we look through the rest of 2025 and into 2026, we will continue to see that change as well. We've also seen some really interesting consumer spending trends by state. So generally the mid-tier capitals around Queensland, Western Australia and South Australia have outperformed New South Wales and Victoria, who are generally much more susceptible to the interest rate cycle as well. But once again, I also think that will change as we look over the next 12 months.
Any other changes in consumer behaviour that small businesses should be aware of?
So consumers still, even though we're seeing some green shoots, as I noted earlier, are still preferring to save and pay down debt rather than spend. So that is still a clear preference out there. So we can see still there's a lot of money flowing through into offset and redraw facilities here at CommBank as well, rather than spending. So that behavioural shift has been a little bit different to what we've witnessed in previous economic cycles. So we feel there's been some scarring from the really challenging cost of living environment that we saw in recent years as well. So that would also be impacting small businesses and perhaps their behavioural response to lower interest rates as well.
Are there any industries that are more vulnerable to cost increases?
So when we look at sentiment, particularly in the business sector at the moment, we're certainly seeing the retail sector and the manufacturing sector have the weakest sentiment. And I think that is really coming down to the choppy consumer and also in manufacturing the cost pressures as well. So that's certainly where we've seen some of the impacts come through.
What factors are driving up wage pressures in the current environment?
So it's really interesting at the moment. The labour market has held up really well in recent years. So the unemployment rate sitting at just 4.3%. That's pretty low compared to pre-pandemic where it was sitting above 5%. So the labour market has seen strong gains for employment. We've seen wages growth actually start to moderate, but it's still sitting at around 3.4%. So a lot of the wages pressure and the cost around labour at the moment is coming from the care economy. So we're seeing stronger wage gains in areas like healthcare, education, public services, because that's where the strength in demand for labour is. Whereas some softness is coming through wages growth in similar to those areas I mentioned before. Anything to do with the consumer, we've seen wages growth slightly more modest compared to those other sectors. But wages growth, as I said, has started to moderate. It peaked above 4%, now at 3.4%, and we do expect it to moderate a little bit more coming forward, but of course that's still another cost for business.
Looking ahead, what are some of the economic indicators small businesses should be most aware of?
I think a few that come to mind for me. I think keeping on top of what's happening in terms of interest rates is really important. So watching the Reserve Bank of Australia decisions. I think sentiment is a really great leading indicator at the moment. So looking at some of the sentiment surveys and what they mean for consumers is very important. I think if you ask me what the number one economic data that I watch every month is, and that would be the unemployment rate. I think it's a really great barometer for how the Australian economy is doing, and it remains on the lower side compared to history. So I think that for me is something that I watch quite closely. And of course, we need to look at what's happening offshore. So a lot of news around what is happening in terms of trade is really important. So I'd be watching just the news headlines on that.
How do you expect the economic indicators to evolve for small businesses?
So we are expecting the economy to improve. So it has been a hard slog of late. So we are expecting growth in the Australian economy to pick up from around 1.3% now, closer to 2% by the end of 2025, 2.3% midway through 2026, and the consumer will really drive that recovery. So that will definitely help small businesses out there. And we are continuing to expect inflation to moderate as well. So thinking about costs in the economy, we are expecting inflation to come back down closer to that midpoint of the Reserve Bank's target band, which is around 2.5%. And we have that forecast going out the next couple of years as well.
Thanks so much, Belinda. Thanks for tuning into our Vodcast with Belinda Allen. We hope you found her insights useful as we head into a new financial year. That's all for now, and best of luck with your business endeavours.